So let's talk about a crypto project that didn't just promise big things. It promised a whole new digital civilization. But what it delivered instead was, well, a complete and utter catastrophe. This is the very strange case of Origin LGNS. I mean, just look at this number. This right here is our crime scene, a 94% loss from its all-time high. A number so staggering, it basically wipes out everything, leaving behind a total wasteland for anyone who bought into the hype. So that's the big question, right? How does a project with so much hype, so much excitement, and this massive grand vision just, poof, vanish into thin air? To figure that out, we've got to start at the beginning. To really get to the bottom of the collapse, you first have to understand the dream. I mean, what was this incredible story that got so many people so excited to begin with? Well, for starters, this wasn't just pitched as another coin. Oh no, they were marketing this as the next evolution of decentralized finance. They called it DeFi 3.0, basically saying it was going to change absolutely everything. And boy, did they know which buttons to push. They hit all the right buzzwords. They were talking about complete privacy, using super advanced tech like zero-knowledge proofs, and get this, an insane staking system that would automatically compound your rewards every 8 hours. It all sounded, maybe a little too good to be true. But here's the real kicker. They weren't just selling technology. They were selling a dream, a utopia. They used this huge, ambitious language, talking about creating a new digital civilization. And of course, that is exactly the kind of story investors who are hunting for that next 100x return are absolutely dying to hear. But as you can probably guess, once you start looking past that shiny sales pitch, a much, much darker picture starts to come into focus. So let's switch gears, put on our investigator hat, and start looking for the cracks in the foundation. And yeah, the whole thing just falls apart when you put the promise right next to the reality. That revolutionary DeFi 3.0 protocol, well, critics were calling it a straight-up pyramid scheme. And all that fancy tech, it was supposedly being built by a totally anonymous team, with no public code audit anywhere to be found. Huge red flags. Yeah, it didn't take very long for independent investigators to start sounding the alarm. One fraud expert, Danny D. Cull, he didn't mince words at all. He called it a crypto cult, a pyramid scheme, and, as you can see here, a ticking Ponzi bomb. All right, let's fast forward to right now. You'd think after all that, the case would be closed, right? Well, not even close. As we speak, LGNS is basically trapped in this classic battle, a showdown between some stubborn bullish hope and an absolute mountain of bearish data. Okay, so let's start with the bull case, what the optimists are clinging to. They're looking at the chart and they see the price coiling up like a spring right under this key $7 resistance level. To them, this looks like buyers are patiently soaking up all the selling, getting ready for a huge breakout. But then you pull back and look at how people feel about this thing. And wow, it is brutal. As you can see, a staggering 88% of market signals are bearish. Only 12% are bullish. The mood is just overwhelmingly negative. And let me tell you, massive breakouts just don't happen when everyone is this spooked. And if you thought that was bad, it gets even more obvious when you look at the technicals. This table shows the simple moving averages. It's a basic tool traders use to see which way the trend is going. And look at it. Every single one, from the super short term to the long-term 200-day, is screaming sell. That's a clean sweep. It's showing weakness across literally every time frame. So this is where it gets just completely nuts. Look at how this chaos shows up in the algorithmic predictions. On one side, you've got Gov Capital calling for a 70% drop in the next year. On the other, CoinCheckup's calculator is spitting out a potential 175% gain. I mean, come on, this is what total and complete market confusion looks like. So what are we supposed to do with all this? It's a mess. How do we cut through all this noise and actually reach a verdict? Well, let's bring in a professional framework that might help us tell the difference between a real opportunity and, a trap. So this comes straight from the pros, the world of professional money managers. It's a simple 4-step checklist. Is it cheap? Is the underlying business healthy? Is it high quality? And are there any big long-term trends in its favor? Think of it like an iceberg. The price you see every day, that's just the tiny tip. The real story is all the stuff hidden under the water. So we take this professional checklist and we try to apply it to LGNS, and we immediately hit a giant brick wall.
On the left, you see the kind of data you absolutely need for a real analysis, stuff like profits, debt, user growth. On the right, well, that's the only data we can actually get for LGNS: price, volume, and how people feel about it.
And that brings us to the verdict. And honestly, it's pretty simple. A proper professional analysis of this thing is impossible. The fundamental data you need to answer even the most basic questions about its health, its quality, it just doesn't exist. And when that's the case, investors are completely flying blind, left with nothing but charts and pure emotion. Which leads us perfectly to the most important part of this whole story, because this is the reality for so many assets out there. How do you protect yourself? Welcome to the Trader's Survival Guide. And let's just start with why this is so critical. The numbers here are frankly grim. A shocking 87% of retail traders never actually manage to be profitable. And this isn't about being smart or dumb. It almost always comes down to a lack of discipline. According to market psychologists, this massive failure rate usually boils down to 3 deadly traps. First, you've got gambler's ruin. That's getting obsessed with being right on every single trade. Then there's revenge trading. You take a loss and you immediately jump back in with a bigger, riskier bet to try and win it all back. And finally, overconfidence. When you start seeing patterns in what is basically just random noise. So what's the defense against, well, against yourself? You build a system. Think of it like your own personal trader's constitution, a set of hard rules that you never, ever break. This isn't about trying to pick winners every time. It's about pure survival. It's about protecting your money from your own emotional decisions. And that really brings us to the final and maybe the most important question you should ask yourself. When you see an asset that's down 90%, what's your first gut instinct? Is it an emotional reaction like hope or maybe greed? Or do you have a process, a system to figure out what's really going on? The answer to that question could really make all the difference.